Welcome back to Wealth Wisdom. Today's episode is an exciting one, as we dive into the world of legendary investors. We're looking at 5 of the best stock market investors of all time and breaking down the strategies that brought them success. If you want to learn what it takes to invest like the pros, keep watching. Our first investor is none other than Warren Buffett, often called the Oracle of Omaha. Buffett built his wealth by following a value investing approach. Essentially, he looks for high-quality companies trading below their intrinsic value. Buffett's strategy focuses on finding companies with strong fundamentals, like consistent earnings, a loyal customer base, and competent management. He believes in buying these companies and holding onto them for the long term. Key takeaway: value investing is about patience. Look for undervalued companies with potential for steady, long-term growth, and avoid jumping in and out of the market. Next up is Peter Lynch, who managed the Magellan Fund at Fidelity and delivered an impressive annual return of nearly 30% over 13 years. Lynch is famous for his philosophy of investing in what you know. He believed that everyday knowledge can help you spot good investment opportunities. Lynch suggested that individual investors can gain an advantage by investing in familiar products and companies they understand. If you notice a brand becoming popular or constantly improving, it might be worth a closer look. Key takeaway: use your personal experiences and insights when choosing investments, and don't be afraid to start with industries you're familiar with. Moving on, we have Benjamin Graham, often known as the father of value investing. Graham wrote The Intelligent Investor, a book that has inspired countless investors, including Warren Buffett himself. Graham's approach is centered around the concept of the margin of safety, meaning you should buy investments at a price lower than their intrinsic value to reduce risk. He believed that the stock market often misprices stocks, and disciplined investors can take advantage of these opportunities. Key takeaway: always aim for a margin of safety. This means buying stocks when they're undervalued to limit potential losses and increase long-term gains. Our fourth legend is Ray Dalio, founder of the world's largest hedge fund, Bridgewater Associates. Dalio is known for his all-weather portfolio, a strategy designed to perform well across different economic conditions. Dalio's strategy is all about diversification. By balancing your investments across different asset classes, like stocks, bonds, and commodities, you can reduce your risk and protect your portfolio during economic downturns. Key takeaway: diversify your portfolio to withstand various market conditions. A balanced mix of assets can help you ride out the highs and lows of the economy. Last but not least, we have John Bogle, founder of Vanguard and a pioneer of index funds. Bogle believed that most investors would be better off investing in low-cost index funds instead of trying to beat the market. An index fund is a type of fund that tracks the performance of a market index, like the S&P 500. Bogle argued that high fees from actively managed funds often eat into returns and that, over the long term, most investors are better off in low-cost index funds. Key takeaway: embrace low-cost index funds for a simple, effective way to build wealth over time. This approach helps you capture the market's overall performance without excessive fees. These 5 legendary investors each had unique approaches, but they all share timeless lessons. From the patience of value investing to the stability of diversification, there's something in their strategies that any investor can learn from. Here's a quick recap. Warren Buffett: focus on long-term value. Peter Lynch: invest in what you know. Benjamin Graham: buy with a margin of safety. Ray Dalio: diversify for all market conditions. John Bogle: embrace low-cost index funds. Thanks for watching. If you enjoyed learning about these legendary investors, hit the like button and subscribe for more insights from Wealth Wisdom. Let us know in the comments which investor's strategy resonates most with you. See you next time.